1140 The Fan.
Talkin Money!
The action continues now with Talkin Money and Jeff Tarbell.
Right. How you doing? We still have our quiz question out there. If you want to jump in at 339-1140 or text me at 441140. The top brands by TV ad spending last year. The number one brand spent $30 million. I'll give you some of the others that go up from the bottom. AT&T spent 11. Coors Light spent 11. Geico spent 11. Verizon spent 11. Universal Pictures spent almost 15. McDonald's 15. Kia Optima 17 million. Warner Brothers 19, and Taco Bell spent 21 million. They were in second position. So the number one used to have a fairly attractive actress was their spokesperson. I think she's gone now. I don't know. They got someone else that kind of looks like her in pink. So if you know the answer to that, 339-1140 or 1-800-920-1140, or you can text us at 441140. We'll let that hang out there for a minute. Hey, I got an email this week, Jeff at jefftarbell.com. Jeff, I'm doing a FHA streamline, and my lender won't let me close until the end of the month. I'm trying to save interest. Why can't I close earlier? Good question. Your lender's doing you a favor. An FHA loan, when you pay it off, the lender who holds your loan right now, if they're entitled to a full month's interest. So let's say that, here we are, today's what's the 16th or 17th. If you say, okay, I want to pay off my loan now and, start on that new rate, I want to get it started quicker because it's a lower rate. Well, your existing lender will still get paid all the way through the 31st, whether you pay them off on the first day or the 31st day or any time in between. So all FHA streamlined transactions are paid the last day of the month, and that avoids double interest for you. So that is a benefit for you, not anybody else. So hopefully that makes some sense to you. Not as many FHA streamlines as there used to be anymore, and the reason being is FHA tightened up and said you have to save at least 5% of your payment in order to go forward. And they've shifted some of the numbers around, so it's hard. So if you're over 5.5% on an FHA loan now, you probably can make it work on a bigger loan amount, but if you're under that, it probably won't work. I got a couple other things I thought were interesting this week. So we've been talking about state budgets and money and things. The federal government is trying to figure out a way to continue reducing the payroll tax from 6.2 to 4.2%. And you know what that means, right? It means that basically that's money that was going to go into Social Security that won't go there anymore. So okay. What's the winner's name, Chris? Mike got it right. Okay, we got one off the I just see T-Mobile came in off the text line as well too. So we got one off the text and one off the phone. You can give them both. Chris, get a hold of both of them, give them a prize if you would. So I'm looking at. They're trying to figure, and I'm all in favor of tax breaks. I mean, I just got done railing against the state trying to raise taxes, but you just have to understand what they're saying. They're saying we're going to reduce how much we put into the Social Security trust fund, which by itself is a joke because there is no trust fund. But okay, that's fine. We're going to cut that back. But where's the money going to come from? They need to raise $120 billion to cover just that nut. And one of the items they've come up with is what's called the increased guarantee fees charged on Freddie Mac and Fannie Mae loans. So now what they're looking at, they can raise, they think, about a quarter of the money from new borrowers who want a Fannie Mae or Freddie Mac loan. So right now, at a time when Fannie Mae and Freddie Mac are coming out with this HARP program, which is a refinance program that will allow you to refinance even if you don't have equity in your house, and there's different phases of that are coming out. So one of the other things they're talking about doing, and when they do that, is also reducing their fees to Fannie and Freddie so that the rates can be lower. So Fannie and Freddie are saying, okay, look, we got about 1 million people that we know have been left out of the process. We want to get them in, get the rates down, keep them in their house. So we're going to reduce some of the appraisal requirements. We're going to reduce some of our fees. And the minute that comes out of their mouth, the federal government comes back and says, oh, by the way, we're going to be increasing the fees to you guys, to the borrowers. So this is another, could be potentially troubling item for home buyers and homeowners. So if you're looking to refinance or buy, the fees that are charged to Fannie Mae and Freddie Mac, which are charged to you, may be pushing the cost of this bill. So in your left hand, you might get a 2% payroll reduction, tax reduction. On your right hand, you might save 2% more when you go to get your next home loan or refinance. So it's interesting what they are doing here. So they're looking at some other things as well, but the one that stuck out the most, which was one of the biggest items, was the Freddie Mac and the Fannie Mae item. Now this is also tied to all the discussion about the pipeline, bringing the gas pipeline down from Canada. So it'll be interesting to think, see what happens out of that. I think that would be phenomenal if we could pull that off. And I may have to get in the pipeline construction business. I can't even, barely screw in a light bulb. So off the text line from the 530, you only think Catherine Zeta-Jones is only fairly attractive? I think that guy person's calling me out. I think she's very attractive. I stand corrected, 530. You're right. Catherine Zeta-Jones is extremely attractive. Is that better? I was trying to, mute it for it. It's almost a family show. So we'll talk about that in a little. We'll let that go. You were going to say something genius there, Blair? No. It would, once in the hour, it would be fantastic. You come up with something that I don't know if you followed this, and I've been railing on these guys a little bit too. Zynga, their IPO came out this week, and I finally see some common sense in investors. And I think after you've had your rear end burned so many times, you finally say, how many times am I going to let that brick drop on my head? Zynga came out at $10 a share, and by the end of the day, it was worth $9.50. It actually went down. And there's been a few of those now that have come out. They set their own price, but the market, after the minute it comes out, the market does its own thing. So Zynga, the stock fell on the first day. So everybody thinks, I'm going to get that IPO and I'm going to sell it and I'll carry it for a month and I'll double my money. You lost 50 cents. You lost 5% yesterday when Zynga goes down. And this goes back to what I talked about a few weeks ago, which was they're so closely tied to Facebook. And that's really their only gig, right? They don't have any, you can't buy a Zynga game online other than on Facebook. You can't, put it in your PlayStation. That's where all their money comes from. And they only made, I think, something like $39 million net year to date. Now, $39 million to you and I would be phenomenal earnings, but for a company that's supposed to be worth $10 billion or something, $39 million is nothing. So we'll see how that affects others. I don't think Facebook will go down in value, though, when it comes out. So we'll see. Off the text line, how do I know if my loan is owned by Fannie Mae or Freddie Mac? Very easy. Just get on the Google machine and Google, does Fannie Mae own my loan? And there's a couple questions there. Does Freddie Mac own my loan? A little form you can fill out and it'll tell you yes or no. That program is for people whose loan was prior to May of 2009. So there's a double whammy there. It has to be owned by Fannie Mae and Freddie Mac, and it has to be prior to 2009. Jeff, what's the actual cost of these no-cost refinancing deals? Oh, yeah, there's a bunch of them there. I can go into those for a full another show. You can do a no-cost loan. And a true no-cost loan means you've taken a rate a little higher than the market rate and the fees are paid for you. That's what a no-cost loan is. What I'm seeing advertised by a lot of these companies on TV and on radio, and I've actually called them, and in my opinion, they are a bait and switch. A lot of them are bait and switch groups. And they'll promise you something, but you can't lock now, and we got to get going, and we'll talk about the rate a little later on. And next thing you know, you don't get what you were promised, but you spend a month working with them, so you don't want to stop now. So be careful of those, but you can check them out. They have to give you a cost breakdown in advance. So we have about 20 seconds left. Nick, thanks for coming in. Good seeing you again. We'll talk about, I didn't even get to all the mortgage stuff. We'll do that next week as well. I hear my Harley call me. I got to get out and get a little ride today. If there's no snow, I got to at least do some riding, right? I got to do something semi-active.
Fat man on a little bike.
On a big bike. That's it. Hey, we'll see you next week, everybody. You can find me at jefftarbell.com or on Facebook, and these podcasts are posted every day on my Facebook page. We'll see you. Aloha.
Talkin' money.